Pair, pip, margin, spread, long, short. Do these terms sound familiar? In this video, we'll explain some of these common terms used in Forex trading. Forex trading is the exchange of one currency for another, and the instrument is called a currency pair. There are two currencies in one pair, and the first currency that appears in a pair quotation is the base currency. The second currency, listed after the slash, is called the quote currency. The base currency is used as the transaction currency, while the quote currency is the calculation currency. For example, the quote for this British pound US dollar pair is 1.35. Here, the pound is the base currency, and the dollar is the quote currency. This means, to buy 1 unit of the base currency, a trader would have to pay 1.35 in the quote currency. Similarly, if a trader sells 1 pound, he will receive 1.35 US dollars. Traders buy the pound-dollar pair if they expect the pound to increase in value against the dollar, and sell if they anticipate the value of the pound to drop against the dollar. Major pairs are the most heavily traded currency pairs in the Forex market, representing some of the world's largest economies. The top major pairs are the euro-dollar, dollar-yen, pound-dollar, and the dollar-Swiss franc. The euro-dollar is by far the most popular, with a massive daily volume of over 20% of the entire market, while major pairs involve transactions with the US dollar. Cross-pair currencies, also known as minor pairs, do not. Historically, currencies needed to be converted into the US dollar before being converted into a desired currency. Today, we no longer need to do this tedious calculation as all brokers now offer direct exchanges. Some of these more popularly traded cross pairs include the euro-yen, euro-pound, and pound-yen. Exotic pairs are currency pairs that contain a major currency and a currency from a developing or emerging market. These pairs are not traded as often as the majors or minors, and trading costs can be higher due to lack of liquidity in these markets. Next, let's talk about a measurement term used by traders to calculate price movements, profits, and losses. PIP stands for percentage in point. It measures how much a currency pair has changed in value. A pip is 1/100th of 1% and appears in the 4th decimal place in a currency pair's quote price. Let's take a look at an example. Here's a quote of the euro-dollar. If the price moves up to 1.1170, meaning the euro appreciated against the dollar, how many pips are generated? To find out, check the difference from the 4th decimal place. In this instance, the difference is 20 pips. Most brokers also use the 5th decimal, which usually shows a smaller number. We call that smaller number pipette. Pipettes are commonly referred to as fractional pips or 1/10 the worth of a pip. Traders prefer to refer to a change of 5 in the 5th decimal place as 5 pipettes rather than 0.5 pips. There are some exceptions to the decimals. One example is the Japanese yen, which exchange rate extends only 2 decimal places. In this case, we use pip for the 2nd decimal place and pipette for the 3rd decimal when trading with yen pairs. Most people usually use buy and sell as terms for buying and selling currency pairs, but some traders prefer long and short. When an investor takes a long position, it means the investor wants to enter or have a buy position. And if a trader mentions a short position, it means the trader is talking about a sell position. Therefore, if you see an uptrend in a pair and you want to buy, you can say, "I'm going long," or "going short," if you expect a downtrend in a pair. When you trade in the Forex market or any other financial markets, there are always two prices shown in the quotes. The bid price is the price that you use as your reference when you enter a sell position, while the ask price is the price that you use as your reference when you enter a buy position. So, just like when you go to a money changer to exchange money, you will be given buy and sell prices. This is the same thing in the Forex market, and the bid and ask prices work similarly. The difference between bid and ask prices is called a spread, which we will explain in the next video. See you there!